Hi, everybody, and welcome to this 30th weekly market technical analysis. Here is Francois Ablé. Hope that you're doing very well. We heard like the first October today. I'm very happy to find you through this our like weekly uh, weekly market rendezvous. My name is Francois Ablé again. It's your first time to discover me. I'm the main trainer and the founder of GSTA, which is Global Street Trader Academy, where we teach people how to trade stock, indices, bond, option, forex. So it's an online Canadian online academy of trading. So we'll have some like kind of major events on this week. So it's very particular. We have of course the NFP and the PMI and all the macroeconomic data, which is very important. And we got also previously the projection of the Fed based on the anticipation for like the economy and also the inflation. So that's probably affecting the evolution of the dollar. So we will see that in a couple seconds. Okay. So thank you for watching this video first. If you don't like you can share that to your friends and like it, and you can let a comment at the Facebook section, or also you can put your comment if you want some like a criticism if you want to for progressing evolve and the proposal for this particular channel and also this uh, broadcast. Okay, so we will starting first by our disclaimer. So the disclaimer here that is the in front of your screen. So features equity, ETF, option, CFD, and other derivative used in trading have the great potential rewards, but also a great risk of losing your capital. So you need to be aware of the risk and be willing to accept them in order to invest in these products. Okay, so I know that you know by heart this disclaimer, so I don't want to lose your time on that. Right. So as usual, we see the USD CAD, Dow Jones, gold, and euro bond because is first is most of them. It's this is some of like product that I used to trade at, and I follow that all the week. And I cannot cover all the product because it's not necessary to know all of them. You have to choose just a couple and stuck with that, and like be a master on that. So this proposal of this broadcast, we just use to analyze USD CAD, Dow Jones, gold, and Eurobond. So but if you have a suggest, please let me know that we can probably work in one of two broadcasts. The next broadcast we can like take a look quickly on the suggestion. Okay, so. Right, so let's jump on the our traditional analysis on the technical compass, as I nicknamed for that. So US dollar, we clearly see kind of range here, but below this particular level of this gray zone here that I already mentioned, that as long as we stuck below that, my bias on the dollar still bearish, right? I know that this particular context could affect to make positive the dollar. The dollar could rally like at any moment with the dollar with like the Donald Trump comment, and we also saw that the previous weekend, at the last Friday, he would like to rename the NAFTA, right? NAFTA, which is the North Atlantic Trans-Pacific Agreement. He wants to rename that to the US and Mexico and Canada agreement, right? With a kind of update of of NAFTA, you know, but with some like this kind of a little bit change, right? In favor, of course, to the United States. But this free group could reach kind of agreement. That's with the foreign minister of Canada doing this statement. They announced this statement in their website. So it is great news for the. It could be the great news for the Canadian dollar. They're not like so far to close this agreement, right? So that's why we saw the Canadian dollar rally on that. Okay, but at the US dollar, we have to focus on, especially on the movement of the Fed, because we clearly observe, and it's always like a public. You can going to consult that on the website for the website of the federal government. They put on the wall the projection for the next over the next 3 to 4 years for the perspective on the Fed, how the Fed see the progression of the PCE, like the personal consumer expenditure, which is uh, kind of like underlying indicators on the inflation. So very important, right? And also they also show us the projection for the GDP, right? The GDP, which is the growth uh, domestic product. Okay, so it's these three indicators is very important for the shape of the economy of the United States, right? And we clearly observe in overall analysis, we clearly observe that the GDP, based on the perspective of the anticipation, it could be bearish to the long term. So it's one way the Fed like priced already that we got a possible we get a possible recession on the United States. So that's very important to how to the like the bias and the reading of the progression and the evolution of the dollar, and also the anticipation in short term for the PCE or the CPI, also the inflation or the CPI core. We also observe that the inflation has been like it could be like also stable. So we could have a kind of steady inflation, but a reducement of the GDP, right? So that means in economics theory, we're supposed to have a progression in same direction for the GDP and the inflation, which is like the Arthur Oken law in economics, kind of theory that the inflation is supposed to going with in same direction with the inflation, in terms of like when we have a great shape of the economy. But in terms of recession, they're supposed to kind of like inversely correlated. So that's why we clearly observe that the board of the Fed, of based on the figure and macroeconomic data, as very like I interpret that as a negative, right? And we probably also like waiting about the fact that the Fed could also see others factors, because Jerome Powell, which is the chairman of the Fed, he's starting now to increase quickly the rate interest, right? He wanted, because he keep like the anticipation at the uh, 0.5%, which is a 25% basis point, right? He did that. And now he want also to increase for another time at the end of the year of December. So that means all the traders of the dollar could price another bullish movement on the US dollar. But my expectation on that, I'm still bearish on the dollar, because we did not clearly break this major level. And as long as we stay below that again, I'm always like bearish or maybe neutral to stock here, and we could see technically kind of lateralization of this range, or probably also some of a simply range. So we can kind of draw kind of a channel here, right? As you see here. So it's the kind of range lateralization, or also kind of, of range here. So very difficult technical pattern for now in dollar. But if you want to trade USD CAD on others pair, which is backed asset at the dollar, my strategy based on that is just only that dollar could like be neutral, or on the long term probably evolve like to be lateralized like this, right? And then all the pairs relative to that could have some catalyzer of macroeconomic data, and then put further or surge the pairs or the dollar. Okay, so that's my anticipation on the US dollar, my strategy. So let's start to the USD CAD. So USD CAD, of course, with the NAFTA and agreement deal, we clearly see kind of we break it this ascending channel or ascending wedge, if you want, and then we clearly going and rally to test the POC, which is point of control of the long term. Okay, so this is chart for like the weekly. So if you want to trade USD CAD at this moment in intraday, please be bearish. Okay, but just waiting that any retracement to the top, and then you can short USD CAD, because CAD rally now because we seems to reach some agreement between Mexico, United States, and the like the trilateral country for this agreement. Even Mr. Donald Trump would like to change the name at the USMCA. So it's still the same thing, and it's a great opportunity and great victory for the Canadian administration, right? So that's why the CAD also the CAD rally. So USD CAD is gonna be bearish, and we could have also a nice GDP figures expected, which is already priced to the to this movement. So we got some like like a publishing for the GDP figures on this week. So probably this movement, the starting movement of speculation has been already priced for that to that. So very careful if you want to buy eventually USD CAD, because this strategy is clearly a bearish movement. Okay, so let's jump to the US 30. US 30, which is the Dow Jones, like the DJIA 30. We stuck here. The blue area here is a kind of the close of the September, right? And we stuck with that. We could have some scenario which is make some a double top, like a top double with double failing on the top here consecutively, and then we could have like a massive sell off here. But based on the fact that dollar the dollar could be kind of like weakens, so we could have a massive movement in intraday on the US 30, and also we expecting a last rally to the until like from now until the holiday period. So that's why I'm very careful on the to short the US 30. Okay, just let the market draw the technical pattern for like the possible double top before to short. Don't anticipate it, and then after you can make a strategy to short the Dow Jones. But at that now, it's more smart to looking to trade on the bullish on the intraday. Okay, and also we could have a price movement at the GDP, which is the NFP, like the NFP. We could have like a nice NFP based on the previous GDP, which was like 4.2%, you know, on the uh, on the economy of the United States. Okay, so that's why I don't want to short on the at the intraday this particular movement. Okay, just let the market go into the top here, and then if you fail it again, I would like short it the index like an intraday. But at that now I'm just staying neutral. But it's more important to work in the direction of the market and in direction of the bias. So then if you want to retract here, and then we could buy again to target this blue area here, right? Gold. So the gold, it's always the same song. Don't touch the gold right now, based on the context of the economy, and you know, I'm very. I know that the gold is not so far to rally in the long term, but again, is still is an issue of the timing, you know, and don't worry about that, and don't like rushing on that. The best point to buy gold is 1160. Everyone knows that. Okay, so at that now for sure we can consider that the gold is bearish, right? Because as long as the Fed price for a tightening policy, and also price for to increase the rate interest, it affect negatively the gold. So for sure, for intraday or scalper or gold could just simply short the gold until 1160 as the this green and gray area here. I'm just looking to buy this bottom here, like the next bottom. But at that now, you can stay neutral or be bullish for the long term, and you can also short in intraday, which is very good. Okay, if you short the gold at the intraday right now, and we clearly see here that the lagging span could draw some of a double bottom as we expected, right? Some of like this, and then we buy the bottom to going further, right? This is my scenario, my personal scenario. So again, this scenario that I suggest to use is not an advice for investment. It's just my how I read the market, and you can also, if you want to duplicate it, but I'm not responsible for your eventual uh, decision, you know, on the financial market. But my expectation is to buy gold, but I'm just looking for the 1160 or 1150 for the long term. Okay, right. So let's finish this technical analysis quickly to the bond. Bond is clearly a great time for short, right? So if you looked at the bond here, so we break it, right? We break this ascending channel technically, and then we do kind of rejection. So this is kind of fear, of technical fear, that's I'm worried about this kind of technical pattern, because of course this ascending channel has been break it, but we got some like a rejection, and this is a weekly weekly candle, right? We do see here like a little bit wicks on the top of this body, red body here. So this kind of technical pattern could also have like a quick reversal as in intraday. So if you want to trade on Eurobond, that's great, but very careful to your level if where you want to short. If I'm like you, I don't want to short right now. I could just like make sure that we got some like a nice recover kind of pullback, and then reshort again if you fell here. I would take like the cross here. If oh yeah, this is my point that I would like to short here. If the market like eventually retrace to this level here, then I can enter into short. But we break this channel and we open below, you know, below this level here. So that means also that the market could go. So that's why I told you, if you on long term or mid term strategy, you can just wait the pullback over here. But if you're on intraday, you can starting to short the market until this point or this point. Is up to you. Why this bullish, this bearish movement? It's because the spread of the Italian bond and the Germany bond too has been like starting to be wide based on the kind of the eventual shortfall on the budget, Italian budget, which is like deny the weight on the European debt, because French president, which is Emmanuel Macron, you know, he's talked about like the responsibility to be faced on this huge European bond that he said we are responsible in this common European, right? But all the party like five Lega and five star and the Lega party on the Italian bond did not like accept that Italian won't be, you know, involved in this like particular huge European debt of the Germany, right? That's why they're starting to cut this PAP, which is the purchasing asset management, right? So based on that, at the short term, European bond has been is bearish, right? So if you want to work in that in intraday, that's a good point to short the Eurobond. So let's finish with this broadcast. So quick recap. So USD CAD, as we saw, technical short term, we are going to neutral to bearish, right? Technical long term is still like bearish too. Dow Jones in technical short term, very careful. We could be neutral or be bullish. And the technical long term, the neutral to bearish. Gold has the same song. It is a technical short term, bearish to neutral. So just waiting the lowest point that you would like to buy, like the 1160 as my privileged price. And the long term is neutral to bullish. This is my scenario for long term. Eurobond now is neutral, but you could be bearish like on the short term. Mine especially, I'm not bearish for now. I'm bullish for the Eurobond, but we're getting into kind of a risk off bias. So that's why it's just putting a negative you know, a negative movement on the Eurobond. So that's why the bond like collapse a bit, but it's still in the through the intraday and through the short term, very short term period, because technically we clearly seen that the potential for the bond is good, like going further on the top, right? So that's why I said neutral, but you could be bearish in the very short term. It's up to you. And the technical long term, I also price to be bullish in my scenario. So here is the key level to watch on this particular broadcast. So 139, 129 and 130 to $38 860. What the signal is already break. So that's why we clearly see a kind of collapse until in direction for the POC, the point of control, which is the zone of $27,600 and $26,750. So here is the key level. You can kind of duplicate it on the chart if you want. Is it just suggested point to this based to the this broadcast? Okay, so thank you so much for watching this video. It's like it, so please let us know, put a comment below the this broadcast, like it, share to your friend, And don't forget to also subscribe to this Facebook page or YouTube channel. Was François Ablé for GST Canada. Just leaving now, and we come back soon again, like tomorrow, for another broadcast. Thank you so much, and have a great day. Bye-bye.